Could the future of US-China relations be heading towards a new trade war? Let's delve into the events that have led us to the current economic situation in China. As we look at the global economic chessboard, we see China's property sector, once a powerful engine of growth, faltering. In response, President Xi Jinping is reshaping China's economic model to drive growth into the next decade. However, the government's solution risks sparking a new wave of trade tensions worldwide. China's leaders are making a strategic pivot, diverting funds from the property sector into manufacturing, specifically focusing on what they call the new three growth drivers: electric vehicles, batteries, and renewable energy. These sectors not only support the global push towards decarbonization, but also fuel demand for commodities like copper and lithium. So far, this strategy seems to be working. Unlike Japan in the 90s and the United States in 2008, China has managed to stave off a recession as its housing market cools down. The world's second-largest economy is still growing at around 5% a year. But this growth isn't without its side effects. China's strategy is fueling imbalances that could set the stage for renewed global trade tensions. Both the United States and the European Union have recently raised concerns about China's overcapacity, with Europe initiating a series of trade investigations. In response, China has launched an anti-dumping probe into European Union liquor products, a move seen by many analysts as a targeted response to the EU's action on Chinese electric vehicle subsidies. Adding fuel to the fire, US President Joe Biden has tightened measures to deny China advanced technology. With a presidential race in 2024, protectionist policies could intensify, especially if Donald Trump decides to run. So, as China's property sector declines and the nation pivots towards manufacturing, the stage is set for potential global trade tensions. Could we be on the brink of a new trade war? The world watches and waits. As China's property sector declines, the nation's leaders are pouring money into manufacturing, focusing on what they call the new three growth drivers: electric vehicles, batteries, and renewable energy. This strategic shift is not only helping China to avoid the economic pitfalls that led to the recessions in Japan in the 1990s and the United States in 2008, but it's also transforming the global landscape of production and consumption. The strategy seems to be working so far. The world's second-largest economy is now growing at an impressive rate of about 5% per year. This growth is significantly driven by the surge in manufacturing of electric vehicles, batteries, and renewable energy technologies. These industries are not only propelling China's economic growth, but also contributing to the global decarbonization efforts. However, this success story is not without its challenges. The shift in China's economic focus is fueling imbalances that could set the stage for renewed global trade tensions. As China boosts its manufacturing output, other economies, both developed and emerging, are feeling the heat. The United States and the European Union have already issued warnings about China's manufacturing overcapacity. The EU has initiated a series of trade investigations, and the US has tightened measures to deny China access to advanced technology. This escalating tension is a clear sign of brewing trade conflicts. Moreover, developing countries are feeling the pinch as well. China's efforts to retain lower-end industries are narrowing the opportunities for nations like Vietnam and Indonesia, which could otherwise benefit from China's move up the value chain. In response, countries like Turkey and India are ramping up protectionist measures aimed at China. It's clear that President Xi Jinping's focus on manufacturing is driven by a mix of economic, security, and social stability objectives. However, this shift also carries the risk of exacerbating global economic imbalances and trade tensions. While China's new economic model is helping the nation avoid past economic recessions, it's also sowing the seeds of potential global trade conflicts. But with this new focus on manufacturing, are we seeing the seeds of a new trade war being sown? As China's economic model shifts, the world is reacting. The US and European Union have recently stepped up warnings on China's overcapacity. The global economic landscape is like a chessboard, and each move can have significant repercussions. Just as the European Union initiated a series of trade investigations into China's burgeoning manufacturing sector, so too did China respond. In an unexpected move, China launched an anti-dumping probe into EU liquor products. It's a tit-for-tat game that's heating up and the stakes are high. But that's not all. The United States, under President Biden, has tightened measures to deny China access to advanced technology. This is more than just a trade dispute. It's a battle for supremacy in the technological arena. It's about who will shape the future and who will follow. It's about the balance of power in an increasingly interconnected global economy. Now let's take a look at the horizon. Imagine a year, let's say 2024. A presidential race is underway in the United States. A familiar figure emerges from the political shadows, Donald Trump. Known for his protectionist policies during his previous term, his participation could see these policies ramp up even further. The geopolitical chessboard could shift dramatically, and the game would enter a new, unpredictable phase. But the story doesn't end there. As tensions rise between these economic powerhouses, developing countries are also feeling the impact. As the saying goes, when elephants fight, it's the grass that suffers. These nations, striving to climb the ladder of industrialization, find themselves caught in the crossfire of this escalating trade war. As China's economic model evolves, the ripple effects are felt across the globe. From the corridors of power in Washington and Brussels to the bustling markets of Vietnam and Indonesia, the world is reacting. And as the chess pieces move, we wait with bated breath to see what the next move will be. So, what does all this mean for the global economy? How might these shifts and tensions affect nations worldwide? Let's start by looking at nations like Vietnam and Indonesia. Traditionally, these countries would benefit from China's move up the value chain. With China retaining lower-end industries and focusing on manufacturing, these nations find themselves in a challenging position. China's strategy has the potential to lower the cost of capital goods, but it also narrows the space for these nations to develop their own industries. It's like trying to grow a tree in the shade of a towering skyscraper. The lack of sunlight, or in this case, economic opportunity, stunts growth and development. But it's not just these emerging economies that are feeling the effects. Countries like Turkey and India, which are looking to attract more sophisticated industries, are feeling the squeeze. In response, they're increasing protectionism aimed at China. They're erecting economic barriers in an attempt to shield their industries from the tidal wave of Chinese manufacturing. It's an economic tug-of-war, with each nation pulling hard to secure its own prosperity. And let's not forget the impact on the developed world. The United States and the European Union have already raised concerns about China's overcapacity. Both have taken measures to protect their industries and technologies from Chinese competition. We've seen trade investigations, tightened measures, and even a potential anti-dumping probe into European Union liquor products. The stakes are high and the tension is palpable, so what's the bottom line? The global economic landscape is shifting. Nations worldwide are grappling with the implications of China's new economic model. Some are struggling to find their place in this new world order, while others are digging in their heels and pushing back. As we look to the future, the potential for a new trade war looms large. The actions of the world's largest economies will shape the global economic landscape for years to come.